Forget about the day-to-day price charts for a minute. Seriously, today we're going to dive into something way, way bigger. A massive supply shock that's happening right now in the Bitcoin market. This is a story about a fundamental change in who is buying Bitcoin and why. And believe it or not, it really all starts with one guy. This quote just nails it, doesn't it? It perfectly captures what's going on. While most of us are just living our lives, debating the small stuff, there is a quiet, relentless accumulation happening in the background. It's fundamentally changing the game before most people even realize the game has started. And that brings us to our first major player, Michael Saylor's company, MicroStrategy. Honestly, you should think of them less as a software company and more as a Bitcoin vacuum cleaner, just systematically sucking up every last bit of supply they can find at a pace that is just breathtaking. And this right here, this is where it gets kind of crazy. The entire global network of Bitcoin miners, all of them combined, produces about 450 new Bitcoin every single day. But MicroStrategy, just one company, is on average buying more than that. This isn't just regular market demand. This is a single entity outstripping the entire world's new supply. So what does that level of buying actually look like in practice? Well, this is MicroStrategy's total stash as of their latest buy. Over 673,000 Bitcoin. Just this past week, they dropped another $800 million to grab thousands more. Just let that number sink in for a second. It's an almost unbelievable amount for one public company to hold. And here's what that actually means for the entire network. MicroStrategy, by itself, has taken 3% of the total 21 million Bitcoin that will ever exist and has locked it away on its balance sheet. It's just gone, off the market. But the key thing to see here is the speed, the acceleration. This isn't some slow and steady plan. They 3.5x their holdings in a single year. And get this, Saylor isn't waiting for the price to dip. He's buying into strength at all-time highs. That signals a crazy level of conviction that today's prices are going to look ridiculously cheap down the road. Okay, so we've got this one obsessive company. But now let's zoom out from a single player to the entire financial system. Wall Street is not on the sidelines anymore. Oh no. They are actively building the roads and bridges for mass adoption, and they're about to open the floodgates for trillions of dollars. From this perspective, the ETFs weren't about getting Wall Street's approval. They were about building a financial API, basically a simple regulated pipeline. This is the easy button for trillions of dollars from pension funds, from banks, to flow into Bitcoin without them ever having to worry about the technical stuff like holding their own keys. They just click buy, and the ETF does all the heavy lifting. I mean, look how fast the world has changed. Just a few years ago, the entire banking sector was openly hostile to Bitcoin. Now, that skepticism has just evaporated. They're not just putting up with it, they're building entire business models around it. And this isn't just a feeling. Here's the proof. 8 out of the 10 biggest banks in the US are now actively involved with Bitcoin, whether it's through custody, lending, or offering ETFs. You gotta remember, banks don't really follow ideology, they follow the money. And right now, all the money is flowing straight to Bitcoin. All right, so we've seen corporations, we've seen Wall Street. Now let's go even bigger. Let's talk geopolitics. Because nation-states are starting to look at Bitcoin not as some speculative gamble, but as a strategic asset, a reserve. And they are very, very quietly starting to play the accumulation game. In the Bitcoin world, there's this classic mantra, stay humble, stack sats. It basically means keep your head down, shut up, and quietly accumulate. And it turns out one country has been the perfect example of this for years, completely under the radar. Meet the Kingdom of Bhutan. While the whole world was watching El Salvador, Bhutan was secretly mining Bitcoin using excess zero-cost hydropower. Today, their Bitcoin holdings are worth 40% of their entire GDP. That's more than all their other government assets put together. They didn't buy it for a quick flip. They mined it for national sovereignty. And the dominoes are just starting to fall. Pakistan recently announced plans to use 2,000 megawatts of otherwise wasted energy to mine Bitcoin. Now, to put that into perspective, that's enough juice to power 10% of the entire global Bitcoin network. This is a massive, massive move. So this is where the game theory kicks in, and it gets really interesting. When one country starts hoarding a fixed supply asset, it puts immense pressure on its rivals to do the same. If Pakistan carves out a piece of the network for itself, can its massive neighbor India really afford to sit back and do nothing? This creates a global race for a supply that's shrinking by the day. But while all these nations are playing geopolitical chess, there is an even bigger wave building. The ultimate force multiplier is the ultimate force multiplier: artificial intelligence. This isn't just some new tech trend. It's a disruptive tidal wave that's going to completely redefine what we think of as value. So here's the thesis. AI is going to outcompete almost every business we know today. The average lifespan of a major company is going to just collapse. All that capital, all that money is going to flee these dying businesses, and it's going to be desperately searching for something safe, something that AI can't just copy or devalue. And that safe haven? That's Bitcoin. It's protected by what you might call a digital moat, an impenetrable defense that AI just can't cross. And this quote really just says it all. Every other technology, every company, every single innovation eventually gets old and decays. But Bitcoin's core design, it's engineered to be immune to that decay. Its greatest feature is time itself. So, okay, let's bring all these incredible forces together. You have a fanatical corporate buyer, you have a newly plugged-in Wall Street, you have competing nation-states, and you have a tidal wave of capital that's about to flee the disruption of AI. This all leads to one single inevitable conclusion. You see, we have a whole new class of buyer in the market now. MicroStrategy is not selling. The banks running these ETFs for their clients, they're not selling. And nations like Bhutan, who are mining for sovereignty, they are definitely not selling. These are permanent black holes for Bitcoin supply. This right here, this is the question that cuts through all the noise. With all of these huge, powerful, long-term entities all buying and holding, where is all this Bitcoin actually coming from? Who is selling? They're buying it from you, from everyday retail investors, from the early adopters, from the traders. The available supply is being systematically transferred from weaker, short-term hands into the strongest, most permanent hands this asset has ever known. And that's the real takeaway here. We need to completely reframe how we think about this. This isn't about trying to predict the top of a market cycle anymore. This is about a deep, structural shift, where the main problem isn't price, it's access. The game ends when there's simply no liquid supply left to buy. And so we'll leave you with this powerful, definitive thought from Michael Saylor. In a world where every other asset can be copied, disrupted, or inflated away, in the race to find a true, unshakable store of value, there is no alternative. There is no second best.